Welcome to the bull versus the bear. Today, we're diving deep into an absolute giant of the energy world, Chevron. We're going to break down the powerful bull case that says this stock is a buy, and then we'll look at the equally compelling bear case against it. Let's get right into it. To really get the bull case, you don't have to look much further than this quote from Chevron's own CEO. He says they delivered record production and strong cash generation. Now, that's not just some fluffy corporate line. It's the bedrock of the entire bullish argument. It paints a picture of a well-oiled machine that's not just running smoothly, it's absolutely firing on all cylinders. And when you start digging into the actual numbers, juggernaut is seriously the perfect word. The bull argument isn't just wishful thinking, right? It is built on a foundation of what looks like flawless execution and just incredible financial strength. So let's break down what that actually means, starting with production. Okay, the first number you need to know is 4 million. That is the number of barrels of oil equivalent that Chevron pumped out every single day in the third quarter. And just to be clear, that's not just a big number, that's an all-time company record. It's a huge signal of their raw operational power. And all that record-breaking production, well, it turns directly into some serious cash. We're talking about almost $10 billion in cash flow from operations in just a single 3-month period. But here's the really wild part. That's a 20% jump from the year before, even when oil prices were actually lower. That just shows you how incredibly efficient this company has become. Now, this number right here might be the most important one for the entire bull case. Chevron is projecting that they can cover everything, all their capital spending and their dividend, with oil prices sitting below $50 a barrel, all the way out to 2030. That's their break-even point. It basically means as long as oil is above that price, they're making money and rewarding shareholders. It's a massive sign of their financial discipline. So how are they pulling all this off? It's not magic. It really boils down to 3 key things. First, they've smoothly integrated the assets from their huge Hess acquisition. Second, they're hitting record output from their operations in the Permian Basin, which is just a powerhouse region. And third, the result of all that strength, $6 billion returned directly to shareholders in 1 quarter. And you can bet that Wall Street is paying close attention to all this. I mean, look at this table. The consensus among the analysts who follow this company day in and day out is overwhelmingly positive. You're seeing a ton of buy ratings, with some price targets stretching all the way up to $204 a share. The pros seem to think this story is legit. So you've got this picture of a record-breaking machine, a company just crushing it, executing its plan perfectly. It sounds amazing, right? So what's the catch? What could possibly go wrong? Well, as it turns out, the biggest risks for Chevron might not be coming from inside the company at all. All right, let's flip the coin and look at the other side of the story. This is the bear case. And this story isn't about internal screw-ups or bad management, nope. It's about powerful external forces, these headwinds that are gathering on the horizon and could really mess things up. The first and, honestly, the biggest headwind is the global oil market itself. The core of the bear argument is classic economics 101. On one side, you have a flood of global supply, and on the other, demand has been kinda lukewarm. And we all know what happens then. When supply outpaces demand, it puts a ton of downward pressure on prices, the very prices Chevron's whole business depends on. So what's actually causing this imbalance? It's a few things, really. First, U.S. production has gone through the roof, hitting record highs. Second, you've got OPEC and its allies slowly turning their taps back on, adding even more oil to the market. And third, demand growth just hasn't been as strong as everyone hoped, especially from China. On top of those market pressures, there's this growing wave of regulatory risk. And a perfect example is this really complex new policy from the European Union. It's called the Carbon Border Adjustment Mechanism, or CBAM for short. And believe me, for a company like Chevron, this is a pretty big deal. So what the heck is CBAM? Well, put simply, it's a climate policy. It's basically a tax at the border. It puts a price on the carbon that was emitted when making certain goods that are being imported into the EU. The whole idea is to stop companies from just moving their factories to countries with weaker environmental rules. So why does a European climate policy matter so much to a U.S. oil company? Because CBAM directly targets sectors that are key to Chevron's future growth plans. We're talking about things like hydrogen, a huge part of their low-carbon strategy, and also iron and steel, which they need for everything. This could make their future products more expensive and less competitive in Europe. And that brings us to the risk hiding in their specific projects. This quote highlights it perfectly. Chevron is betting billions on things like a new blue hydrogen facility. But as this report points out, the entire financial success of that project is tightly linked to getting federal tax money from the U.S. government. So, if those tax credits don't happen, the whole thing might not make sense. That's a huge uncertainty. So, after laying all that out, we're left with two completely opposing, but you have to admit, equally compelling stories. On one side, you've got this internal powerhouse, and on the other, a world of external challenges just waiting for them. Let's just put them side by side. The bull case is all about amazing execution, incredible financial discipline, and smart growth. The bear case, on the other hand, points to some really serious external threats: pressure on oil prices, growing regulatory hurdles like CBAM, and big future projects that depend on government policy to work. And that brings us to the final and most important question. Which of these powerful forces is going to win out? Will Chevron's incredible internal strength be enough to overcome all those headwinds? Or are those outside pressures just going to be too much to handle? And that is where you come in. After hearing both sides, are you a bull or a bear on Chevron? What's your final call? We really want to know what you think. Drop your verdict in the comments below, and let's get a good conversation going. Hey, if you enjoyed this breakdown, make sure to subscribe to the channel and hit that notification bell so you don't miss our next deep dive. Thanks so much for watching.